It's Monday, October 13th, 2025. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. Okay, let's jump straight in. We're looking at that interesting close on Friday and what's maybe setting the tone for today.
Yeah, Friday ended, well, surprisingly strong in some ways, right? Benchmark indices closed up around 0.4% plus 0.4%.
Right.
But, the headline number doesn't tell the whole story. It's where the strength came from that's really interesting.
Exactly. It wasn't across the board.
Well,
Felt very targeted, especially towards those interest rate sensitive sectors.
that's precisely it. We saw Nifty Realty and the Nifty PSU Bank indices both surged about, 1.7%? Quite significant.
Reaching ups.
Yeah, and healthcare wasn't far behind either, gaining a solid 1%. So this sharp outperformance really signals that a good chunk of the market is betting on something changing with rates.
Either the peak is in or maybe some stimulus down the line. They're positioning for cheaper borrowing.
That seems to be the play. Looking at individual stocks, Cipla really stood out. It led the Nifty gainers, up over 3.2%.
And State Bank of India also had a strong showing, right? Climbed about 2.2%. Those definitely helped pull the benchmarks up late Friday.
They did. But now let's maybe pump the brakes a bit, looking at today, Monday, because despite that finish, the global signals are pretty mixed.
Yeah, U.S. futures look okay, showing some strength, but the gift nifty here suggests, well, a weaker opening for us in India.
Exactly. So expect some chop, some volatility probably as the market digests that.
And adding to those nerves, we've got the Q2 corporate earnings season kicking off. Expectations seem pretty muted overall, especially for the FMCG guys.
Yeah, muted is the word. It looks like those consumer staples firms are still wrestling with input costs, maybe some slower rural demand. That never helps investor mood much.
And connecting that to the banks, the financial sector, it seems like a complex picture there too.
It is. Banks are generally forecasting, quieter earnings and definitely slower loan growth for the September quarter.
Right.
Partly the broader economy, sure.
But there's that technical factor too, right? The potential hit from rising bond yields on their margins.
Yes, exactly. That potential net interest margin compression.
Okay, we hear that term NI and compression a lot. For listeners maybe not steeped in finance, can you break down simply what that means? Why are rising yields a headache for banks?
Sure. Think of a bank's basic job. It borrows money relatively cheaply, that's your deposits, and lends it out at a higher rate, that's loans. The difference, the spread, that's their net interest margin.
Good.
Now, when bond yields rise quickly, the bank's own cost of borrowing funding itself goes up. But they often can't raise the interest rates on, say, your home loan or business loans just as fast.
Right, there's a lag.
There's a lag. So the cost of their raw material money increases faster than the price of their product loans. That profit spread gets squeezed. That's NIM compression.
Got it. That makes it very clear why the sector might be bracing itself. Okay, moving to the big event today, the Tata Capital listing. Lots of buzz, but analysts seem cautious, predicting maybe a modest start.
Yeah, the feeling is that the listing may have the pop missing, that big initial jump retail investors often look for.
And that caution isn't just about Tata Capital, is it? It reflects something bigger happening in the IPO market.
Oh, absolutely. It's a profound shift. If you were chasing those quick listing day gains last year, you really need to reset your expectations drastically.
How drastic?
Well, the data shows the average listing gain for retail IPOs, it slumped in 2025 down to just 8%.
Yeah.
Compare that to the almost 29% average we saw the year before.
Wow, quite a drop.
Huge drop. It tells you that speculative froth, it's mostly gone. Investors are being much more careful about valuations now.
Good point. And just quickly before we move on, today's also the last day Tata Motors trades as one single entity before it split, right? End of an era there.
Indeed, a significant moment for them.
Okay, let's pivot. From domestic markets to those pretty significant global headwinds that kicked up over the weekend, the big one being President Trump's threat. 100% tariff on Chinese exports.
Yeah, that landed like a bomb. Immediately threw a massive shadow over global trade, investor confidence, everything.
And the reaction wasn't just in stocks, right? We saw a huge move in crypto.
Massive, a huge crypto market liquidation. Get this, nearly $1 trillion wiped out in just 24 hours.
$1 trillion. I mean, what does that kind of shock say about crypto stability or its connection to the real economy?
Well, it says that despite all the talk about decentralization, crypto markets are still deeply tied to global liquidity and confidence.
So a liquidity crunch, essentially.
Exactly. A classic liquidity-driven reset triggered by that tariff news. When macro risk spikes like that, traders dump risky assets, all risky assets, to get cash. Bitcoin had hit a record high recently, sure, but this showed it's still vulnerable to these big traditional trade winds, like everyone slamming the brakes at once.
Okay. And what about oil? Prices took a hit initially from the trade fears, but then bounced back a bit this morning.
Yeah, oil rebounded about 1%, but the driver wasn't really supply or demand fundamentals, it was purely hope.
Hope for talks.
Just hope for talks between the U.S. and China presidents, hope that cooler heads might prevail, ease tensions, and eventually help demand. That's what drove the bounce.
Meanwhile, that fear factor seems to be pushing investors elsewhere, towards safe havens. Gold's been on a tear.
Absolutely. Gold recently hit a record high, and it wasn't just a small move. It was its largest rally since the late 1970s.
That's a major signal.
Huge signal. It points to really deep unease about currencies, about financial stability globally. Silver also hit an all-time intraday high. We did see gold dip back slightly on Friday, about minus 1.2%, but that looked mostly like profit-taking after such a massive run-up.
Okay, so bringing this U.S.-China tension back home, how does it impact, Indian businesses or investors? Some experts see potential upside for India.
Yes, potentially. Higher U.S. tariffs on China could actually be favorable for Indian exporters. It creates a competitive opening.
A chance to gain market share.
Potentially, yes. As global companies rethink their supply chains, looking for alternatives to China because of tariffs and geopolitical risk, India becomes a more attractive option. And this fits with what we're seeing anyway. Indian companies are already stepping up their push into West Asia. It's smart diversification while the trade giants are slugging it out.
Right, strategic maneuvering.
Yeah.
Okay, let's shift gears quickly. Geopolitics and policy updates from the last 24 hours. Big news from the Middle East. President Trump declaring the war is over in Gaza.
Yes, a major declaration. He's now heading to Israel and Egypt to finalize that U.S. brokered ceasefire and the hostage deal. It's a huge diplomatic push. If it holds, it could really reshape things in the region.
And India is involved in the peace process, too.
Our Minister of State for External Affairs is actually at the Gaza Peace Summit in Egypt today. Shows India's role in global diplomacy. Closer at home, Canada's Foreign Minister, Anita And, she's arrived in Delhi.
Okay. Discussions there about strengthening economic ties, maybe a bit of a thaw in relations.
That seems to be the goal. Realigning, strengthening those bilateral economic links. Domestically, there's also some important policy news for businesses.
What's that?
The government's about to launch a new interest subvention scheme, specifically aimed at MSME exporters.
Okay. Micro, small, and medium enterprises. The backbone, really. So this is direct financial support to boost their trade activity.
Exactly. Should provide some welcome relief and maybe encourage more export activity from smaller players.
Good.
Yeah.
On the flip side, any potential friction points? I saw something about new EU travel rules.
Yes. A heads up for Indian travelers heading to Europe. The EU is rolling out its new digital border system in phases. It means new entry registration requirements.
So a bit more admin before you travel.
Potentially, yes. Just adds another layer, maybe a little friction. Part of a global trend towards tighter digital border controls, really. Something to be aware of for your next European trip.
All right. Let's wrap up with our innovation deep dive. We always like to end on a scientific breakthrough, and this one sounds, well, pretty incredible. Taking supercomputing tasks down to a laptop.
It is genuinely phenomenal. Scientists have figured out a method to run really complex quantum simulation stuff that used to need dedicated supercomputers running for ages on just a standard laptop.
Okay, wow. That's a massive leap in accessibility. How did they actually manage that? It wasn't just faster processors.
No, it's much cleverer than that. It involves expanding something called the truncated Wigner approximation.
Right, the Wigner approximation. Forget the name for a second. What does it do?
Think of it like finding a really smart, really accurate shortcut. Quantum systems have tons of interacting particles, making them incredibly hard to simulate fully. This Wigner method finds a way to model these complex real-world quantum systems very accurately, but using exponentially less computing power.
So it's a more efficient mathematical model, essentially, that needs less brute force computation.
Precisely. It makes simulating the quantum world vastly more accessible.
And the significance for, us,
Yes.
for research. What does this democratize?
Well, it democratizes high-level physics research. Small labs, university groups, even startups that could never afford supercomputer time. Now they can run these complex simulations.
So faster innovation in areas that rely on quantum modeling,
Yeah.
like material science, drug discovery.
Exactly. Material science, drug discovery, maybe next-gen battery tech. The pace of innovation in these fields is potentially less limited by access to that billion-dollar hardware now. It brings complex theory closer to practical engineering. It could accelerate discovery everywhere.
Truly a game changer. Okay, fascinating stuff. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.